Hi everyone, and welcome to today's GASB 96 workshop. We still have a couple minutes until we will get started, but for now, please use the QR code on your screen to join slido.com and use the code on the screen 1443113, and this will allow you to answer our polling questions throughout the webinar and get your CPE credit. So we will begin in just a couple minutes. Hi everyone, and welcome to today's GASB 96 workshop. Just as a reminder, please make sure you are logged into slido.com to answer today's polling questions. For CPE credit, you are required to answer at least 3 polling questions and be present for a minimum of 50 minutes. So if you haven't already logged into Slido, we will show you that screen once more. Please use the name and email address you used to register for today's webinar and enter the code shown here. So if you are qualified for CPE credit, your certificate will be sent to you within 1 week. And a couple other housekeeping items. Just use the questions pane in the GoToWebinar dashboard to send in questions. And for any questions about today's webinar, please contact us at cpeinfo@leasequery.com. So, oh, and one more thing, if you haven't downloaded the Ultimate SBITA guide, which is what we based this workshop on, please do so now. The link will be in the chat for you to download. So once more, here is your Slido screen, and we'll give everyone a couple seconds to use the QR code and join us to answer the polling questions.
You're able to do that on your computer or your phone, whichever one's you, but I think you'll really enjoy Slido. It's a little bit more interactive. It allows for answering questions a little differently than we're able to do with GoToWebinar.
All right. So to kick us off, I am Shannon Matthews, the Manager of Marketing Communications here at LeaseQuery. Quick background on myself. I've spent over a decade in marketing and public relations, focusing specifically on B2B software and working with our subject matter experts to better understand the technology and the industries that we're providing these solutions for. And when I'm not doing that, this summer you can either find me hanging by the pool with my daughter or hiking with my golden doodle Murphy. So I'm joining you guys today mostly just to help facilitate this workshop and polling questions and give our real accounting MVP and author of the Ultimate SBITA Guide, Kylie Arnold, a breather throughout the presentation. So with that, Kylie, you can go ahead and introduce yourself.
Thanks, Shannon. Hi guys, I'm Kylie Arnold, an Accounting Product Marketing Manager at LeaseQuery. And what that title really means is that I get to use my accounting expertise to support our product marketing efforts to accountants like you. Before I pivoted to this marketing role a couple of years ago, I received my CPA license in the state of Georgia, where I began my career in public accounting. And then for the next 20 years or so, I worked in industry accounting, where I held roles in both public and private companies, the large to mid-size, with increasing responsibilities in various industries like healthcare, transportation, and manufacturing. And so my role during this webinar is to give you some of the highlights of the examples in our Ultimate SBITA Accounting Guide, give everybody a better understanding of what it means to account for a SBITA under GASB 96.
Awesome. Thank you, Kylie, and glad to have you here today. So before we get into the agenda, of course, I do have to do my due diligence and give you guys a quick overview of Lease Query. Our company started in 2011 when our founder, Georgia Z, was looking for a less manual way to account for leases. And this was even before the new lease accounting standards really came into the picture. Since then, we've built accounting solutions for FASB, IFRS, and GASB lease accounting standards. And for GASB, which again is what our workshop is geared towards today, we can account for both GASB 87 leases and GASB 96 SBITAs. So over time, we've gone from a one-man shop in Starbucks to a global software company serving over 4,000 customers who rank our easy-to-use solutions and knowledgeable team comprised of more than 40 accountants now at the top of the G2 grid quarter after quarter. So on to the ultimate guide for GASB 96 or ultimate SBITA guide that you heard me briefly mention earlier. Once again, if you haven't, or if you've downloaded the guide and are following along, we have listed the examples on the next slide that will be covered in this workshop. And if you haven't downloaded the guide already and would like to follow along, we will put the link in the chat right now so you can get it. This guide covers the adoption of GASB 96, accounting for subscription-based IT arrangements, or SBITAs, as you'll hear us mention multiple times throughout the webinar, in an easy-to-understand format with real-life examples, 4 of which we'll walk through today. So just a few things that the guide does cover for your future reading. Why do we need to account for SBITAs? What is a SBITA? SBITA terms, subscription liabilities and assets, SBITA accounting and disclosures, and then SBITA changes. And just as a reminder, we will dive into it more in the workshop, but this new guidance, GASB 96, is effective for fiscal years beginning after June 15th, 2022, and all reporting periods thereafter. So no prior guidance exists for these specific contracts. So as you can see here, after Kylie gives us a quick GASB 96 recap, she will walk us through examples 2 through 5 from the guide. She will walk through determining the term of a SBITA, account for the components of an IT contract, calculate the subscription liability, and calculating the subscription asset. And then finally, as we mentioned before, if you have questions about the examples throughout the workshop, please go ahead and put them in the question pane, and we will try to answer those during our polling question breaks or throughout the workshop. But before we get started, the next thing we are going to do is our first polling question. So what comes to mind when you hear GASB 96? You can go ahead and type those answers in. We'll talk through them. Fear is always, I feel like, lots of people's first answer. Lots of pain points here. Arg, fear, pain.
Yeah.
Yes. I'll give you guys a couple more seconds to get those answers in. But as you can see, most people kind of have the same thoughts when it comes to GASB 96, but we're here to help you put that fear at bay a little bit, or at least walk you through some of it. All right, thank you, everyone. Thanks. With that, I will pass it on to Kylie to get us started.
Thanks, Shannon, and thank you everyone for answering those poll questions. Before we go through the examples, let's do a quick introduction of what GASB 96 and SBITAs are. So I know we've been saying that a lot, but first and foremost, a SBITA is a subscription-based IT arrangement. And we have, and I think a lot of folks have, just shortened that to the term SBITA, because to say a subscription-based IT arrangement every time would be a mouthful. So as defined under GASB 96, a SBITA is a contract that conveys control of the right to use another party's IT software alone or in combination with tangible capital assets as specified in the contract for a period of time in an exchange or exchange-like transaction. In the case of a SBITA, the underlying IT software is usually IT products such as SaaS, software as a service products, or infrastructure or platform as a service products are also part of what could be a SBITA. As you see, this definition mirrors the definition of a lease under GASB 87 with a couple of exceptions, primarily that it focuses on IT software alone or possibly in combination with tangible capital assets. So if you're trying to identify whether or not your IT contract is in fact a SBITA, some of the questions that you would want to try and ask are, is the agreement with a provider to use their software? So SBITAs are only, or GASB 96 only applies on the user side. If you're a vendor or giving someone else, or a provider giving someone else the use of the software, SBITA does not apply. So are you able to log in and benefit from the use of the software as needed? Are you paying market rate for the right to use the software? So this question is specific to the exchange or exchange-like transaction part of the definition. And then lastly, to consider, is there a specified start and end date? Are you going to lose access to the software at the end of the contract? If the questions to that, sorry, if the answers to those questions are no, it might be a perpetual licensing agreement, and that is definitely not in scope under GASB 96, which we'll talk about here again in a second. So as with GASB 87, one of the key points of the definition is that the contract has to convey control of the right to use the underlying asset. To determine whether a contract conveys control, a government should assess whether it has both of the following. One, the right to obtain the present service capacity from, and two, the right to determine the nature and manner of use of the underlying IT assets that are specified in the contract. Determining if a contract conveys the right to obtain the present service capacity involves analyzing whether the government has the right to benefit from the use of the software for which it's paying. So the benefits for the software could be through direct use of the software or the ability to exchange the capacity, the use of the software for another asset such as cash, or maybe employing the asset in other ways that it would provide benefit to your organization. The ability to assign users to complete tasks for the organization using the software during the terms of the contract indicates that the organization is directing the use of the software. So once we determine that we believe we have a SBITA, the next thing we would want to look at is whether or not the agreement is in scope under GASB 96. And this is a couple things that we had talked about. So a SBITA cannot be a lease. If the contract conveys control of the right to use another party's combination of IT software and capital assets and meets the definition of a lease in GASB 97, and the software component is insignificant when compared to the cost of the tangible capital assets, then this is going to be accounted for as a lease and not a SBITA. An example of this would be equipment with an operating software such as a smart copier. You're leasing the copier, but you also might be paying for the right to connect to the owners or the vendors' IT system or software that runs the smart copier, but you're paying mostly for the copier, the use of the copier. So you would look at that as a lease under 87 instead of an IT subscription under 96. Also, governments that provide the right to use their IT software or software vendors, they do not have SBITAs. You don't account for SBITAs as if you're a lessor. A SBITA cannot be a P3, a public-private or a public-public partnership. So contracts that meet the definition of a public-private and public-public partnership are accounted for under GASB 80. Oh, let me try one more time. GASB 94. Licensing arrangements that provide a perpetual license for software are also not in the scope of GASB 96. Perpetual licensing arrangements are subject to GASB 51, which is accounting and financial reporting for intangible assets. And then finally, GASB 96 provides an exemption for short-term SBITAs. A short-term SBITA has a maximum possible term of 12 months at commencement of the subscription term. So this is to say that any options for renewals or extensions, regardless of whether or not the organization is reasonably certain to exercise these, contribute to determining the length of the term to identify as a short-term or long-term SBITA. This is really similar to the definition or treatment under GASB 87 for short-term leases, because both consider all the possible term extensions rather than whether or not you are expecting to exercise those. Another difference with leases is the prevalence of costs for SBITAs or fees other than the activities associated with the IT subscription. For a lot of these costs, it's the type and timing of the activity that dictates the accounting treatment. So other activities associated with IT agreements are generally grouped into 3 stages. The first stage is the preliminary project stage. During this stage, organizations evaluate vendors and their applicable pricing and other various options related to the vendors and their organization. Any cash outlays made by the government while in this stage are going to be expensed when incurred. The next stage is the initial implementation stage. During this stage, the organization may spend money and resources actually implementing the selected system through activities such as customizations, testing, data migration, and installation. Any charges that are incurred while placing the subscription asset into service are included in this stage. After the asset is placed into service, this stage is complete. But cash outlays during this initial implementation stage are generally capitalized as part of the subscription asset. The last stage to talk about here is called the operation and additional implementation stage. This begins directly after the term commences. Throughout the subscription term, you may experience operational challenges which require technical support, maintenance, or troubleshooting, or maybe you go through other measures and activities to help with maintaining ongoing access to the underlying asset. So any outlays during the operation and additional implementation stage are expensed in the period incurred unless the activity or cost is related to increasing the efficiency or adding to the functionality of the subscription asset in a way that didn't exist before. So if that is what you're doing for the activity, then those costs are capitalized in addition to the subscription asset. And then lastly, there's a note down here, training costs. Those are always expensed regardless of what stage you may be in when you incur those.
Thank you for that overview, Kylie. So with that, we will jump into our next polling question. And the question is, what is your institution's plan to become GASB 96 compliant? So the response is, we already have a software solution in place. We're planning to purchase a third-party software solution. We will use manually developed spreadsheets. We are planning to outsource, or we haven't thought about it yet. I'll give you guys a couple minutes to get those answers in. looks like our most popular, more than 50% of the people on this webinar already have a software solution in place for GASB 96. Give you a few more seconds before we close out the poll. All right, and we will close it out in 3, 2, 1.
And while we're moving on to that next slide, just real quick, there's a question here about perpetual licensing arrangements. Generally, those are looked at as contracts where you purchase a software licensing agreement and you own it outright forever. So there's not a term related to it. You perpetually have access to that software. And those are not under 96. It needs to have a specific term related to it, or the idea is when you stop paying for it, you stop having access to it.
All right, thank you. So next up is our GASB 96 identification section.
Perfect. So as we were saying before, we're going to walk through a couple of the examples in our Ultimate SBITA guide. Example, I believe it's number 2 or 1, is talking about how you're going to determine if you have a SBITA. And so again, we're going to build upon this background, this entity we set up. It's going to be Central State University. Their fiscal year end is going to be a June 30. The effective date for GASB 97 for them is July 1st, 2022, and they're looking to purchase a new or upgraded student enrollment solution. So as part of the example, the story, the background, to help with the replacement of their current student enrollment system, Central State University executes a contract with a third-party contractor specializing in education and government entity systems. This contractor will help Central State navigate all the stages of the process, including developing the functional requirements, identifying some vendors that will have solutions that meet those requirements, then filtering that list of possible vendors down to a manageable number to complete an RFP as part of the procurement process. After the contractor helps with the selection of the right solution, then they are going to serve as the project manager, overseeing the configuration of the selected student enrollment system, confirming that the legacy data migrates fully over to the new solution, and then lastly, helping train the Central State's administration department so that they're able to be up and ready when the new system goes live. So when Central State does settle on the new student enrollment system that they're going to implement, the terms of the contract are here. So it's going to require monthly payments of $10,000 beginning in January 2023. Those payments consist of $8,000 specifically for the cloud-based student enrollment system, $1,500 monthly maintenance fees, and then $500 for a monthly rental payment of 10 computers that are used with the enrollment system. The subscription term for the student enrollment system they decide to purchase is for 3 years, beginning January 1st, 2023 and running through December 31st, 2025. The vendor's offering 2 3-year renewal options after that first term, and Central State has reviewed those options and decided that they're reasonably certain they're going to exercise the first one, but they're undecided as to whether or not they will go for the second one for a full 9 years. So just about the first 2 terms, which would be about 6 years. The agreement requires annual base rent escalations beginning January 1, 2024 of 1.5%. And then lastly, there is also an additional fee for total users above 8,000 that will be paid and reconciled quarterly. So the question here is, does Central State University have a SBITA with that agreement? Let's go over some of the questions that help us decide. First, does the contract grant the university the use of another party software? So yes, the contract is allowing Central State the right to use the student enrollment software. And then next, does Central State direct the manner and use of the software and receive the economic benefit from it? Yes is the answer again. Central State is going to use the software for student enrollment at their organization. And then lastly, ask ourselves, is the contract within the scope of GASB 96 and can then therefore be accounted as a SBITA? And so the answer here is yes. So it's not a P3 or a lease or a perpetual license. Then Central State is receiving the right to use the software, not providing that right to use to anybody. So that, and then a note here on the lease component, the majority of the contract is a software subscription, although there is a small amount of hardware, the computer that's being leased. We're going to look at this as under GASB 96 because that lease portion is such a small portion compared to the cost of the overall contract. So based on the answers to all of those questions, we have determined that yes, this contract is in scope for GASB 96, it's a SBITA, and we now have to record the related subscription asset and subscription liability. So first, to do that, we have to determine the subscription term, starting with when the subscription commences. And to go over some of the background there, the first step is to determine the term. The subscription term begins or commences when the initial implementation stage is complete. From an accounting perspective, the subscription commencement date is the date the organization has the right to use the underlying IT assets. This date determines when the organization recognizes the subscription liability and asset, unless we decide that subscription is short-term. The subscription end date is the date the organization no longer has the right to use the underlying IT assets or products. Generally, the subscription end date can be altered based on renewals, early terminations, cancellation clauses, etc. The subscription term end date might be extracted from the contract in several ways, depending on how it's specified. Commonly, the specific end date is stated within the term section of the IT agreement, or it's given as a factor of the subscription term and its start date. An example you might see is a contract that says the subscription ends 36 months or 3 years from the commencement date, rather than giving a specific date. So let's identify the commencement date for Central State's SBITA. Here are some of the dates from the example. We've got the contract execution date of December 2021. There's a go live date of September 2022. And then there's an initial subscription start date of January 1st, 2023. So in this example, the commencement date is going to be that go live date of September 1st, 2022. This is the date that the subscription starts because it signifies the end of the initial implementation phase and the start of when Central State is able to use the underlying assets as intended. So that September 1st is the go live date. Subscription term includes the period during which the government has a non-cancelable right to use the underlying IT assets. The term covers periods covered by options to extend if the government is reasonably certain that they're going to extend, or the time that they'll terminate if they are otherwise reasonably certain that they're going to terminate. Just a note, If there are any fiscal, funding, or cancellation clauses, those generally allow a government or an organization to cancel a SBITA, typically on an annual basis, if the government doesn't appropriate funds for the subscription payments. So that type of clause should really only affect the subscription term if the organization is reasonably certain that they're going to exercise the clause. Things to consider when determining reasonable certainty to come up with a subscription term are basically the economic incentives, such as the contractual terms and conditions for the optional periods. Are those favorable to current market rates? That would definitely be an incentive to continue renewing. The potential of a significant change in the government's demand for the SBITA vendor's IT assets. Are those assets related to a building or piece of equipment that the organization is no longer using? Well, you would no longer use the subscription or the software either then. Other things to consider are there significant economic disincentives, such as there a really large termination fee or fees to sign a new SBITA, negotiation costs, and identifying another asset, implementation costs, and all of that. We're really going to go through all of that again. Other things are, what is the organization's history of exercising options, extending or terminating? Are we generally over the course of history having done 5-year rotations or always done the first renewal? That definitely would support continuing to do the first renewal, being reasonably certain that you would do that. And then lastly, also the extent to which the underlying IT products in the SBITA are essential to your organization. If the organization is unable to operate, if there's no, if the software doesn't exist for you, then you obviously would need a replacement. You always would keep this going. Those are the type of things to look at when you're trying to determine the term. So for example 2, in this case, determining the term of this SBITA, what are we going to include? So if you remember, we identified the subscription commencement date as the go-live date of September 2021. So the dates of September 1 through December 31st, 2022 is definitely going to be included in that term. And then the first term of the contract was for the first 36 months of January 2023 through December 2025. And then lastly, the contract provided for 2 36-month renewals, but Central State was reasonably certain that they're going to exercise that first renewal and undecided for the second one. So the first renewal would be included. So you've got the first 2 36-month terms for 72 months, and then the 4 months from September to December. So for this example, your term is going to total 76 months. We'll use that in some of our accounting for the subscription asset and subscription liability that we're going to work on next. The subscription liability. This calculation is going to be familiar to those who implemented GASB 87. It's initially measured at the present value of the payments expected to be made during the subscription term. The payments to include are going to be fixed payments, variable payments that are fixed in substance, payments for any penalties. If your subscription term reflects that you would incur those penalties, and then any subscription contract incentives receivable from the SBITA vendor. And then lastly, if there's any other payments that the vendor requires that we're reasonably certain to incur, those would also be included with the liability. The present value is derived using a discount rate. under GASB 96, organizations have the option to use the contract's implicit rate or their incremental borrowing rate. Per GASB 96, the organization should first try and apply the implicit rate, but if that rate isn't stated in the contract or you're unable to calculate it based on the information provided, it's generally not always available to calculate because it kind of is showing the profit or what the vendor is gaining. If it can't quite be calculated, then the incremental borrowing rate is available. GASB, like GASB 87, GASB 96 defines the incremental borrowing rate as an estimate of the interest rate that would be charged to borrow an amount equal to what your subscription payments are over the same time frame as the subscription term. So example 3 from our guide is how to account for the various components of an IT contract. To account for a SBITA, from the facts presented earlier, Central State is going to have to go through and determine the treatment of each of the components of the contract, which ones they need to expense and which ones are going to be included in the liability calculation or capitalized as part of the subscription asset. And remember earlier when we discussed cash payments other than the subscription payments, the treatment of those contract components depends on the type and timing of activities. So the activities that we talked about for the Central State University contract was the development of functional requirements. That's a preliminary stage activity, and that's going to be expensed as incurred. The other items that are going to be expensed as incurred are the fee for identification of viable vendors, and then the fee for the determination of providers to complete the RFP process. Now, once they've selected a vendor, they've moved into the initial implementation stage, and cash outlays during this stage are capitalized as part of the subscription asset. Any charges incurred for this are going to be capitalized into the asset. So this is going to be our $10,000 system configuration fee, our $5,000 data migration fee, and then the $3,000 go live milestone payment. Those are all capitalizable costs. Now we're in operation of the software since it's gone live, and it's time to look at the actual subscription payments. The go live is the trigger date for the commencement of the subscription. That's when we're going to record it. And so if you'll recall, we had monthly subscription payments of $10,000 that consisted of $8,000 for the cloud-based data enrollment system, $1,500 monthly maintenance payments, and $500 for the rental of the computer equipment. So here I listed these all under subscription payments, but note here that while the $1,500 and the $500 make up part of that $10,000 subscription payment, they are not going to be part of the subscription liability because these payments are not for the right to use the software application. They're non-subscription components and they're going to be expensed as incurred. If the contract was written so that the $10,000 subscription payment was not broken out into the 3 different amounts, or it was not practical to determine that allocation for some or all of these components, then Central State could use the practical expedient to account for the subscription components and non-subscription components as a single unit, basically saying that full $10,000 payment would be part of the subscription liability. However, in this case, because all of those pieces were specified, we'll say that just the $8,000 is going to be part of the subscription liability, and the other amounts are going to be expensed as incurred. So finally, after the subscription asset is placed into service, that initial implementation stage is complete, and you're moving on to the operation and additional implementation stage. Now in this stage, if you made any improvements to the software, that might be capitalized. We did not incur that in this contract, but we did incur $2,000 for training, and we said before that that is always expensed. And then lastly, there's also those additional user fees for any users over the 8,000 per quarter. This is a variable expense that would be unknown, and so this is also going to be expense as incurred and not part of the subscription liability calculation. So we now know the expenses that we're going to incur in the subscription liability. The next step to this process would be putting together a payment schedule so that we can work on the present value. The payment schedule here is that we are going to pay $8,000 a month for the first 3-year term, and then the first 3-year renewal term. The 6 years of payments will have annual escalations of 1.5% starting in 2024. All of those payments add up to $598,037. So we'll use that to calculate the subscription liability. We have to take the present value of those payments. So to take the present value, what would we think that discount rate is? This contract doesn't provide the information we need to calculate the implicit rate. So Central State is going to use their IBR. And here are IBRs at various times. Which one do you think we're going to use for the contract? So here we've got the contract execution date, our transition to GASB 96 date, the go live date, and then the initial subscription start date. And so the answer here, the one that we would use, is going to be the IBR at the go live date. This is the commencement of the subscription, and when you would record the subscription, that's going to be the 3.5%. If the subscription began before transition, we would use the transition date. So as you're implementing or adopting GASB 96, any contract that started before your implementation or adoption date, you would use the transition date as the date to record the subscription going forward. Any contract that's starting after the subscription date, you'll use the commencement date of the subscription as the date to determine your discount rate. So we're going to go with that 3.5%. So now we know the payment terms, now we know which payments we'll use in the subscription liability. We know the discount rate we're going to use, and we'll know the total term to use. We have a present value calculator tool. You'll see that here, and that's what we use to calculate the present value by plugging those pieces of information in. However you want to do that, you need to get to the present value of the payments. So here we're using 76 periods. That's the length of the term. The annual rate of 3.5% is what we determined would be the IBR. And then you can see part of the reason why we wanted to go ahead and put the payment schedule together is we plugged the payments into that present value calculator. The period from September to December where we don't make any payments is 0, and then the $8,000 payments for the rest of the term with the 1.5% escalations. So all of that to say the $598,000 worth of total fixed payments has a present value with the 3.5% borrowing rate of the $533,216. And so that $533,216 will be our subscription liability amount that we'll report. After we determine the subscription liability, we then move on to the subscription asset. The subscription asset is the initial subscription liability adjusted with specific items. And generally that is going to include Any subscription-related payments made before or after commencement, like prepaid amounts, any capitalizable project costs, and then less or you subtract any vendor incentives received at or before commencement. So this is where we're going to go back to some of those additional contract components that we determined were capitalizable, but not subscription of payments a couple slides back. And then also in this example, we've got some additional information to kind of walk through some of those other adjustments that you make. We're going to say that in the contract, there was a lump sum payment of $15,000 as an incentive to cover the costs for the previous student enrollment system. The vendor also offered a rebate of $10,000 when we made the go live before the end of 2022. And then as a reminder, those three fees there were the ones we decided were capitalizable from those contract components: the system configuration, the data migration, and the go live milestone payment. So to calculate the subscription asset, we start with that opening subscription liability amount of $533,216. And then we're going to add our capitalizable project costs, which include the system configuration fee of $10,000, the legacy data migration fee of $5,000, and the go live milestone payment of $3,000. Then we are also going to subtract the incentive received to cover the previous system remaining costs of $15,000 and that rebate of $10,000. If you aggregate all those amounts together, you end up with an initial subscription asset of $526,216. And now we've done most of the hard part. We've figured out our commencement date, the date that we're going to record the subscription asset and liability. We've determined the term, so the length of how long we'll have to amortize the SBITA over. We know the subscription asset and subscription liability amounts, so we can now put together the amortization table for the SBITA. And here is a snippet of what that looks like. The ultimate SBITA accounting guide that we have shows the full amortization table for you, but you can see we're amortizing the subscription asset over a rational amount over its full life, and then we're reducing the liability from the subscription payments. And while you nibble on that for a moment, let's all take a break with a polling question.
So this polling question is almost more of a quiz, but the effective date of GASB 96 is for fiscal years beginning after. Your choices are, glad to see we're at 100% right now, June 15th, 2022, July 1st, 2021, December 15th, 2021, or none of the above. So take some time and get your responses in for this third polling question. And I believe we have a couple questions that have come in that Kylie can answer for you guys.
Sure. Yeah, while you guys are looking at the polling question, I see one question we got here that I missed earlier, but it's talking about if you have a contract with automatic annual renewals, how are those treated? And again, it goes back to that reasonable certainty. If you are certain that you're going to renew for X amount of years into the future, you would include those in your initial term. If you have no idea for various reasons how far into the future or after the first 2 years that you're not going to renew, then you wouldn't include. I'm assuming it says automatic annual renewals, and generally at some point you can say within a certain date we don't want to renew, and so there is a possibility that you would not renew. So it's going to be, you still would take into account like how many years into the future you're reasonably certain that you.
Awesome. Thank you. So we will go ahead and close out the poll in just a couple seconds, but for those of you who have gotten your responses in, 91% of you gave the correct answer. It is June 15th, 2022. We mentioned it at the very beginning of the presentation, but either way, thank you for getting those in. And unless Kylie, you had anything else you wanted to answer, we will move on, close out the poll and move on to our final portion of today's workshop.
And I'm looking here, there's a question that is about capital items, capital assets on the balance sheet that are going to reside in this asset calculation. And you might want to put a couple pieces of information trying to clarify that question, but I'll try and answer what I can for that. So no, you'll still have capital assets on the balance sheet as assets or as lease assets, kind of depending on how they're treated in the contract. What some of the guidance has come out and said, you know, if the capital asset, the hardware piece of the contract is insignificant, like a very small amount compared to the rest of the contract, then you would just treat it under GASB 96, and then vice versa. If you have a lease, a large piece of equipment with a little bit of software on it to help it run, you would ignore the software as under GASB 96 and treat the whole thing under GASB 87 as the lease. In some of the more complicated contracts, or where there's multiple pieces and parts and everything is significant, or expenses are comparable as opposed to one very large and one smaller cost, there might be indication that you could split that up and treat the software piece under GASB 96 and the hardware piece under GASB 87. So there's not a specific 100% always do this answer. It kind of depends on what the significant cost of the different pieces are. Maybe that provided your answer. There might be some more that you wanted from that as well. So, all right, and so we'll cover the last piece of this presentation, the last piece of our example, which is going to be the journal entries. We put together our amortization schedule for the subscription asset and subscription liability. And so now we also can go ahead and put the initial journal entry, what that would be for the asset and liability. This journal entry would be what you record at commencement. The date here, September 1st, 2022. That's going to be when the subscription commences, when we record everything. So you can see we're recording the subscription asset that we calculated of 526 and the subscription liability that we calculated of 533. We are also accounting for the cash incentive we received and the cash rebate we received. We're treating those as cash. You might have treated those as another something in your accounting, but those would be part of this calculation. And then also you can see the prepaid, the fees here that we had for configuration, data migration, and go live that we decided were capitalizable. So within this example, we're saying when we paid those fees, we recorded those as prepaids because we didn't have the subscription asset or subscription liability yet. Then at commencement, when we booked or recorded the subscription asset and subscription liability, then those prepaid fees that we decided to capitalize are going to get reclassed and capitalized into the subscription asset. So that is the initial entry for the SBITA. And then next, let's look at a couple of the subsequent entries. So generally what you would do is just follow your amortization table for the life of the subscription or the subscription term. You can see here we're showing 2 different months because the 2 different periods are treated a little differently. For September 30th, so the months for September through December, because we're not making subscription payments, we're going to have interest expense. We're going to accrue interest for the subscription liability, but we're not making payments, so we're not decreasing the liability. Then, but we're still continuing to amortize the subscription asset over the life of that, like systematic and rational straight line depreciation of amortization for the asset. Then let's look at a month where we've started making payments. We're going to look at February because January we would be covering all of the accrued interest that accumulated. February would be a normal payment month. So February through the end of the term are going to be relatively the same. You're going to have the payment of $8,000 cash. You're also going to have the amortization of the subscription asset, which you can see is the same for what we booked in September at $69.24. And then like an amortization table for leases or debt for the subscription asset, you have the subscription liability amount, the reduction of the subscription liability, and an interest expense component. We're accruing interest and then also paying for the interest accrued under the GASB 96. So we would follow this type of periodic entry for the rest of the term of the subscription. And so that's it as part 1 of our Ultimate SBITA Accounting Guide. We overviewed the definition of a SBITA, what's in scope, and how to treat some of the cash outlays during the different project stages. We went over the commencement date, the subscription term, determining that, and then treatment of some of the various contract components you might see. We also walked through the calculation of a subscription asset and subscription liability. And lastly, we walked through what your initial and subsequent journal entries would look like.
Awesome. Thank you, Kylie. And hopefully this was helpful especially for those of you that put all the different synonyms of the word fear in that first polling question when it comes to GASB 96. And again, our Ultimate SBITA Guide covers more than just these first 4 examples. There's a ton of information in there, so please download that and use it as you are learning more and more about GASB 96. So in the meantime, if you schedule a free demo with LeaseQuery by June 27th, you will receive a free t-shirt. So please use this link on the handout to schedule that demo. So for our final polling question is, would you like a demo of LeaseQuery? So once again, you can get those final answers again in, and thank you so much for your time today. And thank you, Kylie, for going through all of that information. I know it was a lot. And as a reminder, LeaseQuery, one more time, is offering, and I'll show it on the next slide, a free t-shirt if you use the link to schedule a demonstration of LeaseQuery Advanced within the next week. So if you have any questions we did not get a chance to answer, we will be happy to reach out after today's webinar with a response. So thank you again and enjoy the rest of your day.
While we're giving everybody a chance to respond to the questions for their CBE credit, there are a couple of questions that came in from the audience that I can try to answer. So this one asks if subscriptions provided by a consultant service fall under the scope of a SBITA. And I would say yes, they would. It doesn't have to specifically be for a vendor. The SBITA is basically trying to capture a liability for the commitment of the payment liability that you'll have, and then an asset for what you have the right to use. Now, if you're paying the vendor and the contractor, you would really only account for that once. But if you're not, if the contractor is paying like the third party for you and you're only doing that one time, then yeah, that would fall under GASB 96. And then a couple of folks are asking if they can receive a copy or a recording. That's something we will send out a follow-up email in a couple of days with information about your CPE certificates and a link to the slides and a recording that you can refer back to. Looks like folks are done answering the question.
All right, and one more time before we close it out, please, if you would like to schedule a free demo of Lease Query Advanced, please click on this link, and scheduling one by June 27th, we will send you a free t-shirt. And also you can see on the left side, we have Kylie's email address. If you have questions or CPE questions specifically, please email cpeinfo@leasequery.com. And thank you so much for everyone for your attendance today.